Welcome back to the deep dive. Picture this. A world champion, totally undefeated for decades, just unshakable.
hmm
That's really been the US dollar, hasn't it? The absolute heavyweight of global finance. But our deep dive today into this stack of sources, it shows something pretty remarkable.
Yeah, it really does.
This champion, it's facing challenges like never before, and not just from, new contenders, but maybe surprisingly from its own corner too. So today we're going to, pull out the most important nuggets, the really surprising facts, and the key insights that'll help you understand this huge shift. We're aiming to uncover the hidden cracks in its armor and explore what a less dominant dollar might mean for your wallet, your investments, the whole global economy. This isn't just some abstract finance chat. Its future really is a critical story for everyone.
Absolutely. And what makes this deep dive so incredibly timely, I think, is just how profoundly our sources confirm that the dollar's once sort of unquestioned dominance is facing its biggest test in decades. For so long, its position felt like a given, almost, set in stone. But we're going to explore everything from, market charts and economic fundamentals to these massive geopolitical shifts to really get a handle on why this whole paradigm is starting to, maybe crumble a bit.
Absolutely. And to really get what's happening, we've got to start where the rubber meets the road, the market itself. If you've glanced at a dollar chart lately, what you'd probably see is a currency that's, it's moving sideways, kind of stuck in a rut after a decline.
Yeah, just treading water.
Exactly. It's like the market's trying to push this heavy car. The engine's revving, you hear the noise, but the car just isn't going anywhere. Every time there's a little spike, maybe some hawkish comment from the Fed hinting at higher rates.
Right, a bit of good news.
That momentum just fizzles out super quickly, leaving the dollar right back where it started. It's showing these clear signs of fatigue. It indicates the market is, frankly, just tired of trying to push it higher.
That market fatigue you're describing, that's a really critical observation. And if we connect this to the bigger picture, like for the pros watching the markets, our sources show something quite specific. This consolidation, this sideways movement on the DXY, that's the dollar index.
Right, the basket of currencies.
Yeah, exactly.
Right.
It actually shows classic characteristics of distribution, not accumulation. Now, for anyone unfamiliar, think of it like this. Accumulation is when the smart money is quietly buying, building up for a big move up.
Yeah.
Distribution, though, that's when that same smart money is subtly selling into any little rally, unloading their positions because they just don't see higher prices coming. It's kind of like a stock losing its biggest backers even while it bounces around a bit. And our sources point to this critical lack of bullish conviction. Basically, not enough buyers truly believing in the dollar's strength to keep it climbing. We've seen it again and again, failed follow-through after those hawkish Fed hints. Good news just doesn't stick.
It just doesn't translate, does it?
No. And furthermore, there's something called momentum divergence and a weakening volume profile on rallies. Okay, in plain English, that means even when the dollar tries to push higher, it's doing so with less oomph, like a car struggling uphill, running on fumes.
Right, less actual buying power behind it.
Exactly. Fewer actual buyers stepping in to support the move. These are really key technical signals that strengthen the case for an impending breakdown, a move lower from this current trading range, probably aiming for lower support levels. This isn't just technical jargon. It tells us something fundamental about how the market genuinely feels about the dollar's underlying strength. That belief, it's seriously fading.
That's a really powerful picture, like the market's basically saying, nope, I'm not buying it anymore. But if that conviction is fading, it makes me wonder, what exactly is behind this market fatigue? A strong global currency needs a really compelling reason for everyone all around the world to consistently want it, to demand it, right?
Absolutely. It needs a foundation.
For decades, the dollar had that reason. It was largely because the world, it needed dollars to buy oil, the famous petrodollar system. Our sources make it really clear that system isn't nearly as solid as it used to be. So the question becomes, what's the next big thing? The next global magnet that's going to make the world flock back to dollars?
That's the multi-trillion-dollar question, isn't it?
It really is. And our sources, they sift through a few potential contenders, but honestly, none seem to quite fit the bill yet. Take crypto, for example. It's exciting, sure, innovative, but it's just far too wild, too volatile.
Predictable.
Totally unpredictable. No central bank is going to park its national savings in something that can swing 20% in a day. And then there's the AI boom. Now, that's incredibly exciting, genuinely transformative potential. But our sources suggest it feels a lot like the dot-com bubble back in the late 90s.
Yeah, a lot of hype.
Massive hype, sky-high valuations, companies valued in the trillions. But it's not yet generating the kind of steady, massive cash flow that translates into sustained real economic activity, the kind you'd need to structurally support the dollar to replace something as huge as global oil demand was. It feels much more like speculative investment right now, not a fundamental pillar.
You've really hit on a crucial point there about the erosion of those fundamental anchors of dollar demand. The waning influence of the petrodollar, that's a key factor. It's being driven by these profound shifts. We're seeing geopolitical fragmentation, the accelerating energy transition.
You're right. Countries moving away from fossil fuels eventually.
Exactly. And countries like Saudi Arabia, China, they're actively exploring non-dollar oil trades. That was almost unthinkable just a few years back. This directly chips away at that foundational demand. And you're absolutely right about the contenders. Crypto, while revolutionary, it just doesn't have the stability, the regulatory framework, the institutional trust. Not yet, anyway. And as for the AI revolution, our sources clarify, yes, it's a productivity game changer potentially. But right now, it mirrors those speculative excesses of the dot-com bubble. To really support the dollar structurally, AI innovation needs to shift from just valuation hype, investors betting on the future, to generating sustained current account inflows.
Okay, what does that mean exactly, current account inflows?
It means the U.S. economy would need to be exporting vast quantities of AI-powered goods and services, bringing a massive flood of foreign currency back into the U.S., basically creating a whole new dollar-based global trade channel. That's how you build real structural demand for a currency.
And that's just not happening yet.
It's simply not evident yet. So this signals a really significant shift away from those traditional economic pillars, leaving this void that isn't easily filled and making the dollar's future demand look, well, a lot less certain.
What I found really compelling, and honestly a bit ironic reading through the sources, was this idea that some U.S. policies might actually be accidentally pushing the world away from the dollar. One source even called it an own goal. Can you break down what they mean? Because that's where it gets really interesting.
It's a sharp observation, and it really highlights how geopolitics has now become maybe the primary accelerator of this de-dollarization trend. The sources are very clear here. Let's look at tariffs, for instance.
Okay.
The mere talk of huge new import taxes on everything from steel to EVs makes goods more expensive? Yes. But it can also spark retaliation from other countries.
The trade wars, essentially.
Exactly. This creates an environment of trade uncertainty, friction, leading countries to actively look for ways to trade outside the dollar system, just to avoid getting caught in that economic crossfire. Imagine two countries trying to trade something vital, and the tariff policy makes it simpler to just, bypass the dollar entirely.
And then there's the elephant in the room, the thing that was such a massive wake-up call for so many countries, freezing Russia's dollar reserves. That move, wow, that sent a huge signal, didn't it?
Huge, exactly. The, let's call it, weaponization of the dollar's reserve status via sanctions demonstrated when the U.S. froze a big chunk of Russia's foreign exchange reserves, created this powerful and, frankly, irreversible incentive for strategic competitors and even neutral countries to develop alternatives.
They saw their own vulnerability.
Precisely. Suddenly, countries all over the world, China, Brazil, India, even Saudi Arabia, realized that their dollar holdings, their national savings, could be at risk if their foreign policy ever clashed significantly with U.S. policy. It's just a pragmatic response to perceived risk, a way to protect their financial independence.
So they're building backup plans.
They're actively building backup systems, exploring central bank digital currencies, CBDCs, for cross-border payments, setting up bilateral currency swap lines with trading partners, settling more trade in their own local currencies. This isn't just a temporary blip. Our sources really emphasize this is a structural, not cyclical, shift in global finance.
Wow.
These aren't just political headlines floating by. They have direct long-term consequences for global finance and ultimately for the stability and the role of, well, your wallet in the global economy. It's a genuine strategic pivot happening.
Okay, so if international policies are maybe inadvertently pushing other countries away, what about things here on the home front? Our sources stress this crucial intangible thing for any global currency, trust.
Absolutely fundamental.
For the dollar to keep its top spot, investors, nations, they need to believe the U.S. is stable, predictable, reliably run. But what happens when that perception gets shaken internally? We've seen some intense political fighting, constant drama in the US over basic stuff like the debt ceiling, where the country literally debates paying its bills.
Yeah, it's not a good look.
It's like watching a family have a huge argument about paying their mortgage right in front of their wealthy neighbors. How does that kind of internal conflict damage global trust in the dollar?
That's a great analogy, actually. And it speaks directly to how domestic political polarization introduces what you could call a significant governance risk premium. Essentially, investors and other nations start demanding a higher price, maybe higher interest rates on U.S. debt, just to compensate for that perceived increase in political uncertainty and instability.
They want to be paid more for the risk.
Exactly. Recurring debt ceiling standoffs, legislative gridlock, partisan brinkmanship. These don't just make headlines. They actively undermine the perception of the U.S. as a predictable, reliable steward of the global reserve currency. And this erosion, it chips away at what economists call the exorbitant privilege. That's basically the unique financial perks the U.S. gets just because the world trusts and uses the dollar.
Right, like borrowing cheaper.
Precisely. The U.S. can borrow more cheaply. Its financial markets are the deepest, most liquid. Its economy gets a huge leg up because everyone needs dollars for global trade and investment. When that trust wavers, that privilege becomes less exorbitant.
Makes sense.
Our sources even touch on a tail risk scenario. Low probability but high impact, where this political instability could actually trigger a crisis of confidence that goes beyond what traditional monetary policy tools could even fix. It's a stark reminder that even internal political squabbles can have really profound global financial repercussions, hitting the dollar's perceived stability and desirability hard. It's no longer just about economics. It's about the perceived reliability of the whole U.S. political system.
So pulling all this together then, it sounds like the dollar isn't about to just vanish overnight, which I think is important for listeners to hear. Right? It's not crashing tomorrow.
No, definitely not.
But I wonder, is it possible some sources might present a more, alarmist view, or maybe even an overly optimistic one? How do we balance those different takes to get to this bottom line?
That's a fair question. And our sources, yes, they do present a spectrum of views. But the convergence of evidence, it really points strongly in one direction. While nobody's predicting an immediate collapse, the dollar is still, by far, the most used currency globally.
Still number one.
Still number one. But the bottom line seems clear. The era of its unquestioned dominance, where it just reigns supreme with no real rival in sight, that era is over. The world is slowly, steadily, and now quite strategically building a backup plan, diversifying away from just reliance solely on the dollar.
It's not just talk anymore.
No, this isn't just speculation. It's this convergence of the technical market signals we talked about, the eroding fundamental drivers of demand, and these, self-inflicted geopolitical wounds that have pushed others away. All these factors point towards a future where the dollar will likely have a less powerful, though still very significant role in global finance. And what's truly fascinating here is how that old Tina argument, there is no alternative for the dollar, which was the bedrock of its dominance for so long, is really undergoing a severe stress test right now.
Right, because maybe there are alternatives emerging, or at least the desire for them.
Exactly. While our sources confirm no single currency is ready to just step in and replace the dollar tomorrow, the trend towards a multipolar currency system, meaning multiple influential currencies, is undeniable, and it's accelerating. It's not about one challenger taking the throne, but more like a decentralization, a shift to a more diversified portfolio of global currencies. The convergence of the technical weakness in the dollar's price, the lack of new fundamental drivers for sustained demand, and these strategic geopolitical choices pushing others to seek alternatives. It all suggests a structural bearish outlook for its previous level of dominance. The era of dollar unipolarity, it seems to be concluding. We're navigating this probably quite volatile transition to a new, more complex financial order.
Okay, so a lot to process there, a changing landscape.
Definitely. So as you, our listeners, continue to watch the news and observe the global economy, I want to leave you with maybe some concrete signposts to look for, things that can help turn you from just a passive listener into an informed observer of these shifts.
Okay, what should we be watching?
First, keep an eye on the DXY, that dollar index. If you see a clear, sustained break below its current trading range, that's not just a minor dip. That's a major technical signal that the market's conviction is fundamentally shifting towards a weaker long-term trend for the dollar.
Got it. A break below the range.
Second, pay close attention to major new trade deals between countries, especially for big commodities like oil, that explicitly avoid using dollars. Maybe they use bilateral currency swaps, maybe local currencies. These are tangible signs of de-dollarization actually happening in practice.
Real-world evidence.
Exactly. And finally, consider how a sharp downturn in some of those really overvalued tech stocks might further question the narrative around the AI trade saving the day. It would highlight the need for real, sustained economic inflows into the U.S., not just speculative bets on future value.
Right, the difference between hype and actual economic foundation.
Precisely. These will be the signposts, the clues that will really define this unfolding new financial chapter.